Obviously, the market is trying its best to make us very enticed into wanting to trade it, and I am optimistic. So here's the way that I'm breaking this down, right? When we broke down below the range, it's not that I'm going to come back and say, well, obviously this was the sweep of the lows. This is clearly, you should have longed the longs and bought the bottom and then hit stop below the wick and blah, blah, blah. That's variance, right? So variance is swaying you to believe that every single time that the market sweeps the lows that you need to be, oh my God, it swept the lows and, clearly that's going to be a bottom and whatever. Think about this for a second. Every single time that we've made a lower low, someone out there is saying, "Oh my God, we swept the lows." But does it always lead to immediate reversal and then uptrend and then breakout and price discovery? No. Sometimes it leads to sustained downtrend and then we sweep the lows again and then they make the same argument and then oh my God, we swept the lows. This is going to be a bottom, just for it to continue lower, and then we sweep the lows again, and then after 17 times of sweeping the lows and negative 40% later, finally the bottom is in. Finally, that argument becomes reputable. So variance, it happens. We break down below the range. It looks like, smells like, trades like a breakdown, and it wasn't actually a breakdown. It was a deviation. So we re-enter the range nonetheless. And when we re-enter the range in a convincing fashion, so not just, hey, we traded 0.5% back above the range lows. When we re-enter the range and we can say that, hey, that's starting to look like a deviation, this is the reclaim. Now we have the argument that maybe the range lows go to mid-range and we go to range highs thereafter as well. Because essentially what this is now saying to us is we did something outside of the norm, right? Throughout all of this month and a half of trading, we have not been able to break down below 92K. We finally did. We finally broke down below 92K. When we were trading above 92K, the analysis was, well, not the analysis, but what actually ends up happening is we just go from 92K into 102, relatively, right? Ping pong, ping pong, ping pong, ping pong, ping pong, every single time. So we're at 92K, we make our way to 102K. We get to 102K, we find our way back into towards 92K. We've never been able to break down below 92K. We finally did. It is not in my best interest to say, oh, this thing that we have not been able to do, that we're finally doing it here today, yeah, it doesn't matter. Yeah, who cares? We're going to go to 102K anyways. Who gives a fuck? Just be bullish. It is not in my best interest to say that. It is in my best interest to say, hey, this thing that is definitively different, that we have not been able to do before, maybe it leads to a different outcome because it's different, because it's something that we've not been able to do. And then thereafter, in hindsight, oh, that was the bottom, right? At least a local bottom. We don't have to talk about what if you missed out on the generational bottom, what if that was your generational entry, blah, blah, blah. We don't have to talk about all that. We're still trading inside of a fucking range, for God's sakes, right? Don't get ahead of yourself. But we can at least talk about, okay, in hindsight, that was a local bottom. We did something different outside of the norm, and yet here we are doing the norm anyways. And the norm in this region has been 92K goes to mid-range, goes to range highs 102K. So now we have reason to believe that Bitcoin goes to 102K. That's it. You can scale that assumption because higher time frame context is, this is price discovery. This is new all-time highs. So if we break out above this resistance, we would imagine that doing something different this time around, now we're able to just simply break out of the range entirely and resume an uptrend, right? And go into an uptrend. And so the context would be, because this is new all-time highs and we're breaking out of that range at that point, why wouldn't we just resume the same uptrend that has been an uptrend for the good portion of the past 2 years? So that's where you do have the grace to scale your assumptions to say, hey, maybe this is not just a local bottom. Maybe this is going to be a more prominent high time frame bottom. Maybe long term, maybe this is going to be, the bottom for the next rally, for the next leg upwards. So that's where you do have that grace to scale into that assumption. But in the meantime, we're still just trading in the range. I promise you, and here's the thing, we tend to fixate on whatever's happened recently, and that seems to kind of lull us into that state of mind. So I always say the market's job is to get you to think in one specific manner, and then it does something totally opposite. So if we're in a trending market, eventually you're going to be, oh my God, well, we've been trending. I can't remember what the market was like when it wasn't trending. So all we're ever going to do is trend, because all we've done the past 3 months is trend, right? We've just gone up. And then eventually the market goes sideways, and you never saw that coming, even though that's a rational analysis to begin with. When I tell you, hey, the market does something and then eventually it does the polar opposite, you look at me and you're like, wow, thanks so much for this amazing genius analysis, Mercury. Right? It's like that sarcasm. It's like, okay, and what was the aha moment there? What value are you providing to us by saying that? And then it happens, and then it's like, oh well, what it, what is this? Like, oh my god, this market's so brutal. I can't believe it. And then the market chops sideways for a month and a half, and now we can't comprehend trends. Now we can't remember what it's like when the market starts to trend upwards. You, somewhere during this rally, were scratching your head saying, oh my god, there's too many opportunities. Mercury, how do I whittle down my watch list from 100 coins deep to all of a sudden 10 or 15 coins? How do I know which ones to trade? How do I know, Mercury, how do I buy breakouts? Mercury, oh my god, there's so many opportunities. You can't remember what it was like. So what eventually ends up happening is you get so used to a 10% range that the 10% range itself starts to become the max. Right? So what I mean by that is like 10% movements are unbelievable kinds of volatility, and it's not. You're not going to tell your grandkids 40 years from now about the 10% range in January 2025. You're not going to mention it. It's not even going to be top 100 things that you tell them in terms of all the cool stories that you have from trading this market. I'm going to bring up my Jupiter airdrop well before I talk about the January 2025 range 10% zone, right? You don't care about that move. It's not the end of the world that you miss out on a 10% range. Really, what you care about is the trending move that happens as a result of the 10% range. Do we break down and sustain a downtrend towards 70K, blah, 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 whatever? Or do we break up and out and we resume the exact same kind of bull market that we have been in for the good portion of the past 2 years? In which case, every single time that we've gotten that kind of sustained rally, we've seen an abundance of opportunities, overwhelming amounts of opportunities. Think of how many, not just centralized exchange coins that have tailed Bitcoin and outperformed Bitcoin at some point during this rally or during that one or during the most recent one, but also think about the other lucrative opportunities that have popped up in between there, right? Ordinals, NFTs, all the airdrops, all the farming, coins, things that you could have staked, right? You remember Celestia? I know that it's down bad now, but there was a time where it was the hottest coin in the market, and then it was an easy, trade, an easy opportunity that fell into our laps. So that's the kind of environment that you're really here for. We haven't done that just yet. You're not missing out. It's not the end of the world that you missed out on a move from 92K into 99K any more than you missed out on the previous move from 92K into 99K or the previous one prior to that from 92K into 99K. You didn't freak out. You didn't lose your shit. Missing out on that move did not determine, hey, you're a shitty trader, you suck at life. So why does it change all of a sudden today? Just because we swept the lows? Just because when you zoom into crypto Twitter, you see all your, favorite influencers, whatever. Oh my God, that was so obviously the generational bottom. Have fun staying poor if you didn't buy the dip. Oh, okay. Well, I mean, this said the exact same thing on the way down into that rally in the first place, right? Oh, and also, had we sustained a downtrend, they would have stopped tweeting entirely. Where's Owen? Where's Owen? And I love him, right? Owen's the homie. And if you don't know what I'm talking about, then this is totally irrelevant to you. But where'd they go? They just stopped tweeting. What happened? I thought that we were going to go on a generational bull run, and if we didn't do that, then you were going to, hold my hand and tell me when to cut my positions and when you were invalidated and when you were wrong. You didn't do any of that. You just stopped tweeting entirely. Then you put out this hindsight vague post of, well, it's a good thing that I took profit at the highs, once we're trading down here. Well, good thing I took profit at the highs when everyone was euphoric calling for a bull market. But at the time, no one was talking about, hey, you should maybe take profit because everyone's euphoric in a bull market and we've already rallied for 3 months on end. We're up 80% in the past 3 months. Oh, but in hindsight, yeah, it was so obvious that you should have taken profit. Or, right, here's the best one. Here's the one that always gets me. Oh, hey, I was calling, hey, this is going to be a bottom, 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 bottom. Now I'm going to start tweeting about fruit tier lists. Do you think mangoes are S tier? Do you think apples are C tier? Right? I'm not even gonna talk about the market anymore. I'm just gonna fucking tweet about some fruit tier list and shit. Hey, what animes are you guys watching? Right? Hey, what shows should I catch up on? Wait, hold on. How come we're not talking about the market anymore? What happened? I thought you were so giga bullish and variance. Don't sit here and think that just because you miss out on one move or one rally or one trending move, right? Intra range move, not trending. Intra range move from range lows into mid range, an 8% movement that you are now sidelined for the rest of forever, right? It's so ironic. We're sitting here talking about the potential for a Trump rally followed by alt season, golden bull run, banana zone, fucking bull market euphoria, and yet, it's as if the 8% move from range lows to mid range is the thing that dictates we are going to be sidelined and staying poor for the rest of fucking forever. And so, 40 years from now, when our grandkids ask us, hey, Papa, how come we don't have a Ferrari as soon as the day that we turn 18? You're going to say, oh, because I missed the move from 92K into 99K in January of 2025. Right? That's why. 40 years from now, that's what you're going to tell your grandkids? Fuck no. That's not reality. So why do our brains think that way? I'll leave that answer up to you. But we have to break that mold. There's opportunity fucking everywhere, right? The Lido setup that we talked about pulled back perfectly into that entry, very high time frame trend with very high time frame range confluence, and it's up 35%. Hold on, wait a minute. I thought you were a profit maximalist. I thought if anything moves, you're going to trade it besides XRP, right? I thought you're a profit maximalist. I thought that, whether it's commodities or Forex or stocks or crypto, you're just going to come in, market mercenary. You're going to extract your wealth, make your money, and go about your day, right? You're this stoic, amazing trader. So how come you don't give two shits about having missed out on 35% move on Lido? And it bounces from range lows into mid range, but the 8% move from the sweep of the lows on Bitcoin into mid range, that 8% move is driving you fucking insane. How come? Maybe it's that emotional attachment, right? The thing that we always talk about. You have to find some kind of peace in this market. I'm going to be totally honest with you and totally transparent. If I didn't have my Ledger account, if I wasn't totally satisfied with how I'm positioned in this market in terms of an investor standpoint, I would not have that stoic ability to look at this chart very objectively and say, hey, we're still in a range. I don't need to feel FOMO. Even if this breaks out, the impending move would be that it continues trending into price discovery. So really, this would just be the beginning of the move. That's what would be implied, right? When we break out of a massive range, we're not just looking for a measly 3% pump and then it's over, right? Have fun staying poor, guys. That was the rally. I hope you enjoyed the bull market. No, that's not what we would look for. We would look for a sustained trend into price discovery. So even something like buying a breakout of the range should still, in theory, be fruitful, right? Because we're targeting infinity. We're targeting new all-time highs. I don't know how high Bitcoin goes this cycle. You don't know how high. I don't think it's just going to be 108K, but if it breaks down below the range, then maybe it is, right? And the probability has skewed in that favor. So it's just a matter of being objective. I would not have that grace. I would not have the ability to look at this market objectively, even though the analysis hasn't changed. I'm still able to give you, right? My abilities have not changed in terms of how well can I dictate, is this going up, is this going sideways, is this going down on this, that time frame. My abilities would be exactly the same, but the objectivity and how well I'm able to execute off of that analysis totally gets changed, all because I didn't have a sufficient position on Bitcoin and I have an emotional attachment to it. Right? That's reality. People questioned me and said, hey, you're an idiot. You call yourself a trader and yet you are holding Bitcoin as it sells off negative 80% over the course of a year, and your name is Trader Mercury. What? Excuse me? Aren't you contradicting yourself? Trader Mercury, Mr. Trader Mercury, who claims to have been bearish all of 2022 and downtrending and giga bear posting. Wait a minute, you're holding Bitcoin negative 80% lower? How the fuck does that make sense? Because as Bitcoin is, oh my God, wait a minute, that's a 5% relief bounce. Oh my God, wait a minute, this wick looks so crazy. What if that's the bottom? Oh my God, wait a minute, what if this is the higher low that leads to a higher high and breakout, in high time frame trend reclaim and this, that, and the other, right? As that asset is selling off lower, I don't succumb to that kind of way of thinking. I'm not succumbing to that behavior. I'm not just all of a sudden ditching my analysis and deciding to execute because what if I'm sidelined? What if Bitcoin reclaims a high time frame trend? What if that is the higher low on the weekly chart and we reclaim trends and then some kind of news catalyst comes out and Bitcoin does this and reverses straight into new all-time highs again and I don't have any position and what am I going to do? No, those thoughts don't creep into the back of my mind. You know why? Because I have a sufficient position on Bitcoin. I don't need to freak out. I can treat the chart objectively. If it looks like a bearish retest, I'm going to call it a bearish retest. If it looks like a lower low, I'm going to call it a lower low. I'm not going to call it a sweep of the lows, right? So that way, by the time that we are already negative 40% lower 3 months later, and we do start to reclaim trends, who has the courage and capital to call the reclaim a reclaim? Who has the courage and capital to call a breakout a breakout? The person who on the way down was not calling sweep of the lows, was not saying, oh my God, watch, look at that RSI bull div. Oh, now it's a bigger bull div. Oh, now it's an even bigger bull div. Now it's an even bigger bull div. No, that person has lost either the courage or the capital to be able to participate for whatever happens next. Doesn't matter what happens next. It could be chop. It could be full-fledged reversal into new all-time highs. It does not matter. That is the same person that has lost the courage and capital to participate. There are no regrets here for the analysis that I've made. I'm not here to flip the script on you and make you seem like, oh, well, don't you remember when I kind of hedged myself and I said that maybe this is a sweep of the lows, even though I'm not going to call it that? No, I don't give two shits about trying to make you think that I'm good. I win enough organically. I don't need to fabricate wins. I was wrong. I was straight up wrong. I said, hey, the breakdown that looks like a breakdown, smells like a breakdown, trading like a breakdown is probably a breakdown. And then it didn't break down. So then we attribute arbitrary definitions to justify why did it not do what we thought it would do. Oh, because it was a bear trap, Mercury. Oh, it was a sweep of the lows. Oh, it was obviously a deviation. It was a fluke. It was a fake out. It was market manipulation. It was this. It was that. Whatever the fuck you're going to call it, but it all means exactly the same thing. We should have broken down, and we didn't. Here we are doing the exact same thing that we've been doing for the past month and a half, anyways. So, what is the objective analysis thereafter? Well, what have we been doing for the past month and a half? Range lows, go to mid range, go to range highs. And then we have the grace to, hey, wait a minute, hold on. What if the very, 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 very high time frame uptrend, because we're trading an asset that historically tends to uptrend into new all-time highs continuously ever since its existence, what if it just does that again? Because all you need to do is break this stupid little gray box and all of a sudden now we're doing that again. Or at least we would think that we are. So we have the ability to scale the assumption to that degree. There is no regret here. I don't have regrets in markets. The only time that I have regrets is when I ditch my thoughts and I start to prioritize whatever the fuck I'm thinking or however I want the market to play out instead of whatever's happening objectively. And then whatever's happening objectively goes on to happen and I feel like an idiot because I prioritized my own thoughts instead of what was the 4-year-old able to say. What was the analysis that was in front of your face that now that we're selling off and you said, hey, maybe that's a sweep of the lows. Now we're selling off. We're down negative 20% from your entry. How do you feel? Well, yeah, I feel like a fucking idiot now, don't I? Yeah, I feel like an idiot if I'm saying, oh, when we break out of this range, guys, it's going to be a breakout. Don't look for just a measly 5 or 10% push. Target, exponentially higher prices, blah, blah, blah. And then we start to break out. And I'm like, oh, yeah, that breakout that looks like and smells like and trades like a breakout. No, it's not actually a breakout. It's a sweep of the highs. It's a fluke. It's a deviation. It's a it's a bull trap. It's it's a fake out. It's the absolute top for, all markets ever right before recession. And then if it continues breaking out, well, yeah, now I feel fucking silly, don't I? Because what happened on the chart went on to continue happening, and I wasn't prepared for it, and now I have to sit here and try and convince you that I was caught off guard and I never saw it coming. No, I did, right? I did. I just decided to neglect it and prioritize what I thought. I'm not going to allow myself to succumb to variance. short-term outcomes are now all of a sudden going to dictate how you trade markets, what philosophy, what strategy, what principles you're going to apply for the rest of infinity, for the rest of your lifetime. I'm not going to do that. I would advocate for you to do the exact same thing. Granted, that's not me taking anything away from you. If you called this a sweep of the lows, maybe your context, maybe your discretion kicked in. Maybe you think that how equal or how clean these lows are is a prime example or a prime opportunity for us to sweep the lows and stop a bunch of people out and then reclaim the trend or reclaim the range thereafter. And if that's how you operate, kudos to you. Congratulations on your win. I hope that you keep it up. I hope that your discretion is kicking in. I hope that you're feeling what it's like to be able to apply nuanced thoughts and execute and be rewarded for that execution. You're taking that risk. It's asymmetric to whatever the reward is going to be in the event that opportunity pays off. So, congratulations, you're thinking like a trader. That's not me taking anything away from you. I'm not trying to convince you to treat the market or trade the market the way that I trade the market. What I do want to try and convince you is that I'm okay with how I'm trading the market. You need to be okay with how you're trading the market. That's the takeaway. I am sidelined on Bitcoin. I have altcoin positions because reclaims occurred, trends were pulled back into, right, Lido. I'm fine. I'm totally good. I'm totally happy if this market decides to, break out and Bitcoin decides to sideline me for the rest of forever because of my unwillingness to call a sweep of the lows a sweep of the lows and call it a downtrend instead. That's totally fine. Even if I didn't have that Lido position or I didn't have that hype position, I would still be able to say, well, opportunity is abundant and Bitcoin breaking out is going to allow for other things to break out. It's going to create that kind of revolving effect, that snowball effect, where all of a sudden now we're overwhelmed with opportunities, right? Remember how we're like, oh my God, this market is so fucking boring. I hate it here. This market is brutal. It's choppy. It's mundane. Worst bull market ever. And all of a sudden, somewhere around here, we're like, oh my God, there's so many opportunities. What do I do? Which coins do I trade? How? My watch list is 100 coins long. What do I? Oh, look at that. And then all of a sudden, those coins go on 100, 150, 200, 300% rallies in the span of a month or two. Oh, yeah, that's the market that we're trading, by the way. That is always how it's been. That's always how it's going to be. This is why you're here. You're in crypto for that exact reason. Because all of a sudden, we can go from, oh my God, this market is so brutal, it's the worst bull market ever, to all of a sudden in 5 days, 7 days, whatever, now it's, oh my God, this market is so crazy. I wish things would slow down. I can't keep up. I wish I had more time in the day. I need to quit my job so that I can pay more attention to the charts, right? Yeah, that's how this market has always operated. You know it firsthand. If you've been even trading this market for longer than 2 months, you've experienced it firsthand. It is always going to be that way. You know why? Opportunity is abundant. And greed's not going anywhere. As long as human greed exists, bull markets will too. There's always going to be something that is trading in a bull market. There's always going to be something that is uptrending. Maybe you're not willing to trade it, XRP, right? Maybe it's too pumpy. Maybe it's too illiquid. Maybe the structure is not the way that you would like it to be. Whatever, right? That's a totally different conversation. But those opportunities are going to be there. And for every one that you're not willing to take, there's going to be one that you are willing to take. That seems too obvious, that seems too easy, that seems so straightforward, that is going to fit well within the realms of your system and is going to give you a comfortable trigger that you can execute off of and then be rewarded from. That's the reality of this market. So what ends up happening is that recency bias. I want to go back to that. That's what I attribute it to, is recency bias. So when we spend a month and a half trading inside of a 10% range, your brain starts to adapt, right? Your instinct, your survival instinct, and this is vindicated by the fact that we're still here today, your survival instinct is to always want to adapt. Your brain subconsciously, whether you realize it or not, is trying its damnedest to adapt to what's currently happening. So it's trying to understand that, hey, we are in a 10% range. But what ends up happening as a result is that the 10% range is now all that we can comprehend. It seems extreme. That 10% movement from range lows into range highs is now all that we can really fathom. That 10% move is the ultimate move and all we've been able to experience for the past month and a half. So now that 10% move starts to get attributed with more merit, right? We start to attribute more merit to that 10% region because that's what we've gotten used to. But you don't care about a 10% move. You're not going to dictate your success off of a 10% move. So why does our brain do that? It starts to adapt to whatever has happened most recently. So what ends up happening is that 10% move feels fucking massive. And yet it's just a 10% move. By the way, when we missed out on the bottom, we did not call a bottom here. And then we bought the reclaim of a high time frame trend instead. You missed out on a on a 10% move. You're always going to miss out on moves. It's not a big deal. It's not the end of the world. If you don't manage to catch an opportunity on this coin, there's going to be one later down the line, or there's going to be another opportunity on another ticker. Just change the chart. Look at that. Now you have an opportunity. A valid setup is a valid setup, even if it's not an outperformer. Yes, I'm looking at you, Lido. You are not an outperformer, and yet a valid setup is still a valid setup. And that was a very easy, very clean, very straightforward 35% thus far that we could have captured. Instead of freaking out, oh my God, is this the range low? Is this still, within the realms of a test of range lows? Is this sweep to the lows, or is this a breakdown? Oh my God, what do I do? What do I do? Do I buy the reclaim? Does this look like a reclaim to you yet, Mercury? What do you think? What do you think? No, dude, you don't have to do any of that. You could just, here's this altcoin. If it bounces into mid-range, it's a 55% bounce into mid-range. Maybe it just gives me a pity bounce. Maybe it doesn't even get to mid-range. Maybe it puts in a lower high and only goes 35, 40% higher. There you go. Opportunity is fucking abundant. There will always, always, always be more opportunity than what you can catch. If you want a chance at doing well in this market, you have to get comfortable with missing out. That's the reality. You have to get comfortable with missing out. You are always going to miss out on more than what you can catch. Just in listening to what I've had to say to you for the past 35 minutes, you have missed out on 20 opportunities. Why do you not care? Why does it not bother you? Why is that not driving you insane? Why, when you fall asleep later tonight, are those 20 opportunities not going to be at the top of your mind, causing you insomnia? Why? Because you weren't fixated on them. Because you didn't care about them. Because the ticker wasn't Bitcoin, and you don't have an emotional attachment to them. Because when you exit the stream and you go scroll your crypto Twitter timeline, you're not going to see your timeline talking about those 20 opportunities. But you still miss them all the same, so why does it not matter? And there's all the reasons we just said. You have to get comfortable with missing out. Another thing, you have to get comfortable with buying higher. I put out a whole thread today. Hopefully it provided value to not just you guys, but just people in general. But it is discussing a lot of the things that I've had a very hard time with in my trading experience, in my career. One of the topics is you have to get comfortable with buying higher because a lot of the times we tend to pertain what setups are here available for us today to what setups could we have taken. So I'll give you an amazing example of this. So all the way back down here at the bear market lows, you know what was a very good justification for people to not buy somewhere around here, $19,000 Bitcoin, even though that is clearly in our analysis or the way that we would, talk about it. And actually we had it drawn this way. In our analysis and the way that we're talking about it, this is a deviation back inside of a massive 5-month-long range. The range low to range high movement is 17% in itself. That's not even discussing the idea that maybe this is a more generational kind of bottom or a more high time frame bottom, and maybe we break out of the 5-month-long 20% range entirely. So that's not even discussing the more moon boyish, possibility. It's just hey, what if range lows go to mid-range, go to range highs? And that's a very straightforward and very logical analysis. You know what people use to justify why they wouldn't buy $18,000 Bitcoin? Because all of 4 days ago, you could have bought $16,000 Bitcoin. And you know why people would not buy $17,000 or $16,000 Bitcoin? Because all of 3 weeks prior to that, you could have bought $15,000 Bitcoin. So why would I buy here when 3 days ago I could have bought here, and 3 weeks prior to that I could have bought here? But hear me out. I know a lot of people that bought here. I know a lot of people. It wasn't me. I didn't have a $15,000 Bitcoin entry at any point But I know a lot of people that gave the thesis, oh my God, wait a minute, FTX blowing up? Hold on, this is the worst of the worst. This is as bad as it's ever going to get. FTX blowing up is probably a capitulation event, $15,000 Bitcoin. Yeah, that seems like a good entry to buy this and hold for the next generational bull run, even if it's just an echo bubble, right? Even if it just plays out like other cycles and just like 2019 and would just get some kind of pop, that pop in itself is going to be incredibly fruitful. So I'm going to buy $15,000 Bitcoin based off the idea that this is capitulation. This is peak fear. I cannot count on two hands how many people I know that have $15,000 entries at this point. Somewhere in this region. I have so many friends that have $15,000 entries and have the same thesis: capitulation, FTX was peak fear, this is as bad as it's ever going to get, generational bottom. I don't know a single person that maintained their $15,000 entry. I don't. If that person is transparent, which my friends are very transparent, they will tell you firsthand, yeah, I closed. Yeah, I got chopped up. Yeah, at some point I took profit. Yeah, at some point I got, annoyed with all the choppiness. I just closed the position. So wait a minute, hold on. You had the best entry that anyone can ever possibly get. And so why is it that your entry didn't dictate your success? Because it took 2 months to fucking play out. It took 2 months before your entry and your thesis was actually vindicated, before we actually started to deviate back inside of that massive range. So even though your entry was amazing, it meant absolute fuck all, because at some point you either close for break even, slight profit, or whatever. You end up chopping yourself up throughout several trades in that same exact time period before the move that actually matters. So entry price was not the dictating factor, the determining factor between are you an amazing trader or are you a shitty trader. It was timing, it was patience, it was discipline, it was the ability to execute objectively. Oh my God, this looks like a breakout. That's a higher high. I'm going to call it a breakout. I'm going to call it a higher high. Oh, this is a high, low, higher high. Wait a minute. Let's extrapolate that. Oh yeah, that's an uptrend. Oh, maybe I should buy here. Right? That's what I did. I didn't buy the $15,000 low. I actually bought somewhere around here, betting on the deviation. Didn't work. I lost money on that trade. I went to go do the exact same thing the next time around. I didn't have a $15,000 entry at any point during this 2 month period. I bought somewhere around here. I did incredibly well because my timing was correct, not because my entry was 15,000 as opposed to 17,000. Right? That might not sound like much, but that is a 10% difference. So opportunity is fucking abundant and timing is everything. The other thing that people tend to do, because we're human and we tend to fixate and gravitate towards assets that we either adore or assets that have brought us a lot of value because we've been trading them pretty successfully. So the asset that I adore is Bitcoin. That's what personally is attributed for me. So I love Bitcoin, right? I'm a big believer in its fundamentals. That's why I have a position in it in my investment account in my ledger, right? An asset that fits in hand with the other alternative is Solana. I don't give two shits about Solana fundamentals. I'm going to be honest with you. I'm sorry for all the Sol maximalists. I don't care about Solana. I just like trading the coin because I've had a ton of success trading the coin the past 2 years. And actually, not just 2 years, but ever since it's been created, I've had good success, right? So especially in the past 2 years. So I'm very inclined to want to go trade Solana again. I'm I'm human just the same way that you are. I have my biases. Obviously, you've seen me neglect something like XRP for weeks and weeks and weeks on end. So I have my biases the same way that you do. I tend to gravitate towards these coins that I've already had success on or that I adore, that I love to trade. So what ends up happening is my brain starts to relate what is the current trade that I'm taking back to what is the previous trade that I took. And a lot of the times that just leads to nothing but a handicapped and flawed mindset. Because what I often would find myself doing is, wait a minute, why would I enter? Let's just say that there's a position here to be had for me in my system. There's not really, unless you're taking breakout trades at mid range, which I don't know. All power to you and good luck. But that's not my system. But let's just say that there is a trigger here, right now for me on Bitcoin at 99,000. But you remember, and if you recall, my position that I previously had at 57,000, I closed at around 94, 95K. So wait a minute, why would I buy $99,000 Bitcoin when I just exited Bitcoin at 95,000? I'm going to wait for 95,000 or lower before I enter again, and then that's where I'm going to trade Bitcoin, because something in my brain starts to trigger and it goes, "Oh my god, you're buying higher than where you previously exited? You fucking suck." And I'm like, "Yeah, you're right. I do fucking suck. Why would I buy higher than where I previously exited? That doesn't make any sense." And then you miss out on a move that does this because you weren't able or weren't willing to trigger and buy 99K because you're too fixated on fulfilling your ego, right? Fueling your ego, and you want to buy lower than where you just recently exited. Don't tell me that this hasn't ever got to you. If you have 2 months of trading experience, I promise you have probably, right? 99% guarantee. You've probably done this in your head. You've probably justified not doing something because it was at a higher price than where you previously exited, right? And then a lot of the times that will cause you to miss out on the next subsequent trending move because you wanted to, play into your ego instead of play valid setups that were staring you in front of the face, right? Instead of doing that, you want to fill your ego, and then your ego causes you to be sidelined, and then you succumb to FOMO at the highs, and now all of a sudden you weren't willing to buy higher, 4% higher, and now you're forcing yourself to buy 30% higher, and then we get a negative 10% pullback, then you're closing at lows, and then the fucking tumultuous, right, slippery slope starts from there, and it doesn't matter what you do next, you're just going to find a way to lose, right? Because now you've created this miserable mindset and these terrible thoughts in your head, and markets have now become, you perceive them as brutal, right, and choppy, and just very much like predatory, right? And so that's the reality that you create because that's the only mindset that you can find yourself in because that's all that you've experienced. All because you just didn't want to buy 3 or 4% higher than where you previously exited. And the last way that this affects you, not being able to buy higher, is on the way down, we start to make these arguments, right? And these arguments lead to complacency or death by 1,000 cuts. We take the same losing trade over and over and over and over, right? You remember look at the RSI bear div. Oh, now it's a bigger RSI bear div. Now it's an even bigger RSI bear div. Now it's an even bigger RSI bear div. Now it's even more exacerbated and the RSI is crazy overbought. Now it's... And then the RSI bear div argument finally fucking works. Well, you didn't have any ability to actually go and trade that because you're too busy making the same argument 17 million times prior. More, what's the word? More relevant to today's price action because actually what we're here for, I would hope, is relentless uptrend, right? We're hopefully optimistic in markets. Bears do not win. Perma bears in markets do not win. So I really hope that you're not a perma bear. So if anything, perma bull, right? And just defensive bull. And we know when to cut positions and sit in cash for a little bit, right? But I would think that on a long enough time frame, you are preying on PREY markets to go higher. So inherently what that means is every single time that we're cutting positions, we start to succumb to the fear that maybe I'm cutting my position just before the market goes higher. Maybe I'm going to miss out on this very thing as to why I'm here in the first place. This idea gets exacerbated even more when you start talking about an asset that you're emotionally attached to. We start to succumb to that fear even more so than we would on just any other ordinary coin, on any other ordinary trade or setup that we are taking. Every time you go to cut a position, the first thing that comes into your mind is, what if I cut and it goes higher? But that very fear often causes you to be complacent, right? I'll go back to, it's such an amazing example. I don't want to pick on anybody, but when Fire asks me, all the way back here several weeks ago, hey Mercury, how do I hold my Solana position to make sure that I'm prepared for alt season and I'm holding, I have some kind of position on Solana for when alt season occurs, but even though it's downtrending, how do I hold my Solana position for alt season even though it's downtrending on high time frame trends, even though it's broken down and I'm technically invalidated? How do I continue justifying holding Solana? You don't. Why would you? You see how contradictory that statement is? How do I make sure that I'm positioned on Solana for the giga bull market alt season crazy euphoria rally, even though it's showing high time frame weakness and I have no reason to be holding it here today? You don't. You cut your Solana position. And then later, what that allows for is that luxurious state of mind where you've now cut that position and you didn't succumb to that fear of what if Solana, goes substantially higher, right? You didn't do that, and now look at that. Now Solana's pulling back into a weekly high time frame inflection point. Do you want to buy the retest of an 8-month long range high, or do you not want to buy it? Do you want to wait for lower? Would you rather buy reclaims? Would you rather do this? Would you rather do that? You see how every single one of those options that you have stems from, do I want to do something? What is in my best interest to do? How do I want to execute? You're allowing yourself to think and act and execute like a trader. But if you don't cut your Solana position based off of the idea of what if it goes into a crazy bull market alt season euphoria price discovery, right? If you don't do that, what position are you in when Solana decides to retest an 8-month long range? Should I cut at the lows? Should I cut at high time frame support, take my losses on the chin, and do something that I should have done and just cut my position and just start anew? Should I add more to my Solana position and have an average entry of $205? So that way, if we relief bounce, then maybe I can cut at break even. But if we don't hold this region, now I'm going to be down even more on my Solana position. What do I do? What do I do? You see how all options that you have in that scenario do not stem from a graceful state of mind. They do not stem from, hey, here's my best interest. It is, hey, what's the best of the worst decisions? Which one can I live with best? Which one is going to cause me less loss of sleep later tonight when I do that? Do I just hold the position and hope and pray that we reverse back to my break-even price? Do I cut at the lows and just take solace in the fact that I can't lose more? Do I add more to my position and try to get myself out at break-even? What do I do? You don't really have an amazing alternative. You don't have a great option. You've locked all of those off to you. All that you've allowed for yourself are shit options. So which one is least shit? Well, that's not really the epitome of a trader. That's not the position that we want to find ourselves in. So it's the same dynamic, but in this case, when we're talking about Bitcoin, instead of breaking down and then saying, hey, you wouldn't hold that position, it doesn't make sense. Instead of it breaking down and me being able to prove my point very vividly, it did this. Oh, you should have held that Solana position. In hindsight, that was the bottom Mercury. It was so obvious because as soon as we broke down below the 4-hour 200s, we clearly bullish retested the 6-hour 200s, and then that was the bottom, and now we're V-reversing. Oh, but Mercury, if we didn't hold those 6-hour 200s, then I was just going to tell you that it doesn't matter because now we have the 8-hour 200s. Oh, and Mercury, after losing those 8-hour 200s, after breaking down below that argument too, now we have the 12-hour 200s. Oh, wait, and Mercury, after we broke down below that, now we have the 200 dailies and Mercury. And now that we break down below the 200 dailies, why would I cut my position at mid-range? What if mid-range relief bounces back into range highs? At Mercury, at this point, now we're at range lows, and I'm already down negative 45% on my Solana position. So why would I cut Solana at all? What's the difference between being down negative 45% and being down negative 90%? It's really not that much different at that point. Maybe I'll just keep holding. You know what? Solana has great fundamentals anyways. It'll eventually come back to life, maybe even if it's next cycle. You lost the fucking plot. You lost the plot. You went from being a trader to now all of a sudden, now your trades have turned into investments. Why? Oh, because I was fearful that what if I cut my Solana position and then it does this? Why? Why does it matter? Here's a trigger. Buy the reclaim. Oh, you didn't buy the reclaim because it did that? Okay, buy the breakout. Oh, you couldn't buy the breakout because it did that? Because it left you sidelined? Okay, maybe zoom into a lower time frame. Is there an hourly trend that we can start to trade here? Right? Is there a 30-minute trend? Is there something? Oh, there's not anything that you're comfortable with. There's no opportunity for you. There's no amazing trend portrayal. Okay, is AVAX popping off? Is AVAX starting to reclaim trends? Is AVAX starting to break out of high time frame ranges? Is if it's not AVAX, is there another coin? Is there some other opportunity out there? You lock off opportunities. Why? Because you're fearful of what if the market goes higher and I don't know what to do about it. And it leaves me sidelined. And I miss out on every opportunity for the rest of forever because I missed out on one opportunity once. Why? Why does it doesn't make sense, right? So acknowledge that. Acknowledge that it doesn't make sense to think that way. It doesn't make sense to execute just for the sake of executing, just for what if something happens. You determine your set of perceived probabilities. You take action at regions where it's worthy for you to take action at. You cut when it's time for you to cut. You don't have any regrets because there's nothing to regret. You're playing into a system, you're playing into a strategy. Guess what? Losing is part of that. You need to learn how to deal with losses. You need to learn how to be comfortable buying higher. You have to learn that stuff. It's earned, not given. You don't just randomly one day wake up and now you're this amazing trader that isn't bothered by any emotions ever again. And now you've learned to just come in and be a market mercenary and trade markets, extract your value, take losses on the chin, and keep going. That doesn't happen. It takes experience. It takes you forcing yourself to do that and then being able to see the end result anyways and realizing, oh, hey, the market has done, some of this and then some of that and swept the lows and went higher anyways and then some of that and then we turn into a range and then it breaks down and then we do some of that and blah 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 and oh, that's a fake out. Oh, never mind, we're going lower again. But yet your P&L still does this. At some point it's gonna fucking click and it's gonna feel very good realizing, wait a minute, remember that time where I called the breakdown a breakdown and it wasn't, it was a sweep of the lows? Remember that time where I called a higher high and it wasn't, it was a sweep of the highs? Remember that time where I called an uptrend and it was a fluke and we turned into a range? Remember that time where I started calling it a range and we immediately started to trend in either direction from there? Oh yeah, and yet here I am. Yeah, I remember those times. And yet here I am. And yet opportunity was so fucking abundant. And yet this market is so amazing in terms of how much opportunity there is and the abundance of it. And when those opportunities are presented, they don't just tend to be 2 or 3 R trades. Oh, hey, mom, I caught Lido, right? We're up 30% on Lido. I'm up 2.5 R right now, right? You can retire now, mom. No, no. They tend to be 10, 15, 20, 30 R trades. Oh my God, I doubled my account in the span of a month, right? That. Oh, hey, I rotated my profits from doubling my account into some stupid meme coin that my friend shilled me or that I found in Gem Hunting Channel, and then it ran 10x, and now my doubling of my account is now a double plus 50% because of this stupid meme coin trade. Wow, that's awesome. Thank you, crypto. Oh, and in addition to that, I did that on Jupiter, right? I traded that on Jupiter, and because of the volume that I traded on Jupiter, now I just got an additional, 2 grand as a result. Wow, only in fucking crypto. So how come you can't see those opportunities? How come it's so like blocked off? We don't have the ability to look past what's happening today and start thinking bigger and start um, accepting our faults and accepting the times that we're wrong out of acknowledgement that if you have the patience, if you have the discipline, if you have the strategy down packed, if you have a tried and true way and a confidence in your own abilities, it's not gonna fucking matter anyways. I don't know the answer, but I leave it up to you. So that's my TED talk. Give me 2 seconds here. I do need to blow my nose. Anything that you guys want from me, please feel free. But yeah, give me a second. All right. So let's go back to Bitcoin. Sevik has a good question here. Mert, can you speak to why you moved your top of range up to 102k from the prior, what it was, 98 or 99k? So essentially, what I'm trying to do, Sevik, and we talked about this a little bit in previous live streams, so this isn't just hindsight, but essentially what I'm trying to do is I'm trying to mitigate the amount of false positives. Right. So what happened last time is we said, hey, that's a breakout. That looks like a breakout, smells like a breakout, trades like a breakout. It's a breakout. And here's the ideal, right? Pullback, retest, and really 3-hour 200s get the idea across a little bit better. So here's the ideal pullback retest into this general region. As long as we hold this general region, then it's a breakout. It still looks good. It's still perfectly fine. No big deal, right? We could still treat this as we're getting ready for the next leg higher. And then we didn't do that. So the fact that we didn't do that means that we're now kind of like breaking out of what I thought was the norm, and we gave a false positive, we gave a false trigger, and we didn't do what I thought we would do. We actually did the opposite, right? We went right back down to range lows. So now moving forward, in order for me to determine, hey, this time is different, I need to allow myself to be able to fathom something when it's actually different. So when price actually is able to do something different than what it has been able to do before, that didn't lead to anything different. So it just led to resumption of the range, right? So the only time where I can say, hey, this time is different is when we break out of this region, because we have been able to break out of this region a few times now at that point, and nothing has really resulted from it. So I need to kind of like expand and give price a bigger obstacle to overcome before I start making, hey, this is different arguments, right? So that's why I'm adapting my portrayal of the range into what have we not been able to do. That if we did it, it would be objectively, hey, this is different this time. So we have not been able to get above 102K, right? And then that makes sense in my head just as much as the previous range high did. This is a little bit choppy, right? But I'm still acknowledging, hey, this is range highs with confluence, and it works well. And so the next subsequent breakout, we would think, okay, so the same way that it worked as resistance these two times, it should be support. And it wasn't. We just did the same thing that we've been doing. We just went right back down to 92K. So I'm giving price an additional barrier. Hey, if you want me to be convinced that you're breaking out into price discovery this time, Bitcoin, you got to break out of 102K because you weren't able to do that last time. When we broke out of 98K, it meant nothing. You weren't able to get above 102K. So when you do that, I'll believe you. So that's the analytical approach. That doesn't mean that, hey, I'm not allowed to take any trades until we break out of 102K. But for me, that is what that meant, right? I'm really not interested in trading the range itself. Honestly, I'd much rather go trade altcoins that are even somewhat trendier, and I can catch, moves there on that end. So I'm not trading the range. The only way that I'll look to trade Bitcoin again in terms of a trending idea is when we break out of the range entirely. And yes, what that means is Mercury cannot do anything from 92 to 102K on Bitcoin with any amount of, significant confidence, with any significant degree of confidence. So what that means is I get potentially sidelined when we start to break out of 102K if we don't do something along these lines, right? Anything along these lines, I'm going to be sidelined. So if Bitcoin decides to break out 102 and just do this, guess what? I miss out. So if you recall, this is me being transparent with you guys. I did not catch the Bitcoin move from here into here. I didn't catch it. Actually, I didn't catch this one either. So we'll explain why in 2 seconds. I'm getting to that. But when I didn't catch this move, the analysis Mercury was that the range low acted as range low, right? Oh, wait, why is this box green? There we go. The range low acted as range low. From there, we reclaim high time frame trends. From there, we reclaim very high time frame trends, right? Now we're breaking out above 200 daily moving averages as well. And we were using that as a historical portrayal on Bitcoin, as our very high time frame trend portrayal. So wait a minute, we're high time frame uptrending, daily market structure is bullish, We're above 200 daily moving averages. Mercury, aren't you long on Bitcoin? Don't you want a position on Bitcoin? And I look at the context of the chart and I'm like, nah, I'm good. I didn't buy the high time frame trend reclaim. I didn't buy that pullback. I didn't buy the breakout. I didn't buy the breakout of 200 dailies. I didn't buy that pullback either. I didn't do that. I was looking at it and I said, that's mid range. Do I really care that much to capture the mid range move? And yet, if you go read the daily market updates these days, or you go watch those streams, you're going to hear me say, I'm so bullish on Bitcoin. I think it goes to range highs. And now that we're above very high time frame trends, I think that not even we break out of range highs, not even just range highs. I think we break out of the range highs entirely. And then we get to target whatever the next resistance level is, guys. And the next resistance level, maybe that's like 40K. So we can target 40K. Maybe we break out above that. We target the next resistance level and the next one and the next one. Wait a minute, Mercury. So that's your analysis. So why aren't you trading that? Oh, because I don't need more Bitcoin. I don't need it. What do you mean you don't need it? I have a ledger account with a bunch of Bitcoin in it. Oh, and also, if Bitcoin is breaking out of this range and I'm right on that analysis, then I bet you my INJ position is going to grossly outperform. Because INJ threatens price discovery. Oh, and RNDR, yeah, it threatens price discovery. Oh, and Solana, yeah, it just broke out of a 10-month long range. And if, Solana is higher beta and Bitcoin is the alpha, and they're both breaking out of a multi-month long range, which one do I think is going to outperform? Probably Solana, right? Here's Solana trading somewhere around $25. I'm like, hey, maybe Solana goes to 100. Well, that's a 4x move compared to Bitcoin's, hypothetical 40% move. So one, I can allocate positions or allocate that capital to somewhere else in the market that's probably going to outperform Bitcoin. And two, this asset that I'm emotionally attached to, I'm not in this dire sense of urgency to be exposed to it because I already have exposure to it. So I'm mitigating that emotional attachment that way. I have a long-term, allocation to Bitcoin. Oh, okay, that makes sense. So I miss out. I miss out on the entire rally. Exactly what we're saying is going to happen. I say, hey, I'm comfortable with missing out on it. So then when I miss out on it, do you think that all of a sudden I tell myself, no, I'm not going to buy $28,000 Bitcoin. It's not in my best interest to do so, even though that's the analysis that I'm making, is that 28,000 is going to be a good entry compared to what we're going to see in coming weeks, coming months, right? So hold on. So now that we're breaking out Mercury, now we're trading at 33K, don't you feel like an idiot for not having bought Bitcoin? No. My Solana position is up 60%. My INJ position is up 50%. My RNDR position is up 100%. My whatever the fuck Litecoin or Link position, no, I think it was Link. My Link position is up 80%. Why would I care about missing the 30% move on Bitcoin? I'm outperforming. It's not like I told myself, hey, I'm okay if this, and that happens, I'm okay with it. And then it happens and I'm like, I'm not okay with it, market buy, right? No, that's not what happens. I told myself, hey, this is how I wanted to be positioned. This is what's in my best interest to do. And then when it came time to do that and follow through with that, I did. And that provided me that luxury. And the next time around, honestly, I miss out on the exact same kind of rally. Why would I buy Bitcoin when I can buy RNDR at $4.50? It's such a cleaner trade. Breakout, pullback, retest, 4-hour 200s, and range highs. Oh my God, and RNDR threatens price discovery. Why would I buy Bitcoin? RNDR goes up 200%. Oh, 250 actually, right? Oh, but don't you feel like an idiot for missing out on the 75% move on Bitcoin? I didn't miss out. I have a ledger account that has Bitcoin in it. The only difference is I managed to catch this rally on Bitcoin. It seemed in my best interest to do so. Still had some altcoin positions, right? I still bought Solana somewhere around whatever it was, 160. Traded that too. I had a bunch of other positions, but I did manage to catch that Bitcoin position. It seemed in my best interest to do so. When there's not a trade for me to be had, I don't take a trade. When I tell myself, hey, I'll wait for the breakout of 102K, and that means that because I'm waiting for that breakout, I might miss out on Bitcoin entirely. Because what if Bitcoin does this? Right? And now what am I going to do? What if I'm start looking for a pullback into this range, and this is my pullback? And I was supposed to buy that along 15-minute 200s? Well, I'm going to miss out on Bitcoin. Oh, are you okay with that, Mercury? If the answer is no, then maybe I need to do something about it. And what I mean by that is if the answer is no, I'm not okay with missing out on that Bitcoin move. And what that tells me and what that should tell you is that you have an emotional attachment to Bitcoin. If you care so much about missing the 20% Bitcoin move, but let's say Tesla's up 20% today and you didn't give two shits about it, maybe that means that because you care about this asset so much, you need to do something about it. You need to own the asset that you care about so much. And that's going to provide you that objectivity, that fluidity to just trade the chart however you're able to trade the chart, the best way that you know how. For some people, that's buying the sweep of the lows and re-entering in the range on the hourly chart. For me, there is no trigger. There's no trade to be had here. We're just trading in a range, and I don't really tend to fixate on trading ranges. I'm comfortable with my analysis, and I'm comfortable with the way that I execute on it. You need to be comfortable with your analysis and the way that you execute on it. But I'm sorry that I went on such a tangent, Sevik, but I hope that I answered your question. I hope that I provided excess value to whoever needed to hear that little spiel. But it goes hand in hand with a lot of the rant that I already gave you guys to start the stream. Okay, so Lecter has a bunch of questions here. Sorry everyone and Mercury for this long message. You can skip these questions if you think I should figure this out on my own. I don't tend to skip questions, but a lot of the times there are things that you just need to figure out on your own. But if that's the answer, I will tell you that. So in recent times, I've cut some of my positions, which are in profit, and breaking some key levels. I have a lot of positions that are a loss of 70 or 80%. What should I do with them? I can't tell you what you should do with them. So people ask me this question all the time, and it's the worst question that I could ever possibly get asked because it is the epitome of I experienced the bull market cycle, I made a bunch of money, but I gave it all back and I have nothing to show for it anyways. You don't want to be in that position. Really, Lecter, the answer to your question is instead of thinking about what should I do now to try and remedy the negative 70, negative 80% drawdowns, how do I cure the cause? Instead of treating the symptoms, how do I cure the cause? How do I make sure that I never find myself allowing myself to draw down negative 70, negative 80%? Now, if you went into that position with an investment mindset and you said, hey, what if I buy $99,000 Bitcoin or $3,000 Bitcoin in 20 years, it's not going to fucking matter. So whether, it draws down negative 80% or whatever, it's not going to matter because Bitcoin's going to be trading at, 500,000 by my calculations in 20 years. Okay, cool. Well, that's totally different. That's not what we're talking about here. But if you enter a position, hey, let me put a spot position on, it starts to creep towards your stop loss and you're like, ooh, I don't want to get stopped out. No, cancel the stop loss. A lot of us don't even put the fucking stop loss in the first place. Terrible. Absolutely terrible. You wake up 2 days later, you're down negative 30%. What are you going to do? And all of a sudden, you do nothing, right? Because you don't know what to do because you had no plan for that, alternative. And now that negative 30%, 2-3 months later turns into negative 80%. It does not matter what you do at that point. You lose. And this is what I mean by creating a better tier of quality in terms of options. Let's assess your options right now, Lecter. And it's not me trying to attack you. This goes for anyone that's down negative 70, negative 80% on anything. It goes for me too. I was bag holding fucking Floki from the past bull market cycle. It just so happened to come back to life this cycle, right? Cool. Thanks, Floki. But it happens. I've been there before. But let's assess our options when we're in that position. Do you cut at negative 70, negative 80% loss? Well, that sucks. Now you're realizing negative 70, negative 80% loss. You can write that off in your taxes, whatever, right? But you're still realizing a loss. That sucks. That never feels good. Do you add more to the position? Whew, terrible, terrible option, right? Probably don't want to add more to the position. A lot of the times you're down so damn much that you can't justify adding more to the position. But if you do, now you're adding more to the already deep, dark pit, and you put more on the table on what is already a losing trade. That never feels good either, right? Adding more risk to something that you're already losing on. So we have two shitty options so far. Do we do nothing at all? Because negative 70% is damn near negative 99%. So what's the difference? What's the big deal? What, we get to sell and capture 20 or 30% of our initial position? Why would I do that? It makes no difference to me. It's not going to change my life. So you just hold for the rest of forever and hope and pray that maybe next bull market cycle that coin comes back to life. Shitty option, shitty option, shitty option. Every single time that somebody asks me this question, my answer is whatever you can sleep best with at night. I can't tell you what to do. I can't tell you which shitty option is the least shitty for you. It's just because no matter which one you do, it's going to feel like shit. It is not a good option. It is not what you thought you were going to have to come across and when you started trading, right? It's the do you prefer this shitty option, that one, or that one? You're still going to feel like shit no matter which one you do. It's still going to be in the back of your mind. It's still going to cause you to lose some sleep, right? It's still going to be lingering on your brain 3 months from now. It's still going to be that no matter what. So which one is the least shit for you? I hate that that's the answer. That's the only answer that I've found. Doesn't matter what you do. What I don't want you to do is figure out an alternative, figure out what the answer is, just to find yourself asking yourself the same questions, the same, should I do this shitty option, or that shitty option later down the line. You need to learn from your mistakes. You do not learn from your success. You don't. Try convincing somebody that they shouldn't be calling for sweeps of the lows here, right? You can't do it. It's not possible. Try convincing somebody that they shouldn't be calling for sweeps of the highs here. It's not possible. They're going to keep doing it. They're going to keep wanting to call for sweeps of the highs. Oh, except for they called for a sweep of the high here, right? They called for a sweep of the high here. They called for a sweep of the high here. They called for a sweep of the high here. Try convincing that person to not call for sweeps of the highs long term. You can't. It's not possible. Money talks louder than whatever you can possibly say to that person, right? And they made money from calling that a sweep of the highs here. They're going to do that for the rest of forever. You can't convince that person. So instead of trying to remedy symptoms, cure the fucking cause. Instead of asking, what should I do now that I'm down negative 70%? Ask yourself, what can I do moving forward that I will never find myself down negative 70% ever again? Unless that is already preordained, I've already accounted for this, right? I'm entering a Bitcoin position in 20 years, it's not going to matter. My entry's not going to matter, right? Unless it's already pre-accounted for. Otherwise, you never should be able to find yourself in that position ever again. That's the answer. Cure the cause, don't treat the symptom. Number 2, I wanted to know general guidelines you might give for a beginner like me who didn't trade at all before, lost a lot of money before getting into too many coins with no plan, having a full-time job as a software engineer who can only give time on weekends and some time on weekdays, in their late 20s and unmarried, no financial burden. I have the context of almost everything you have taught, being in crypto for close to 3.5 years, mostly active in development, actively bought coins for 1 year in 2024. I also don't like adrenaline rushes. Okay. The answer that I have to give you is, like you said, you have to figure that out. I love that you gave me a description of your background and, all the context that goes in hand with it. You didn't have to throw in that you're not married in there. I don't think that most 20-year-olds are married. But yeah, you have to figure that out, man. You really do. There's nothing that I can do to help you with your individual situation. I can only give you the guideline for figuring out your own individual situation, and then how should you think about things from there. There's nothing that I can say directly to you about your individual situation. Even with all that context, I still don't know what kind of mindset that you're in. I still don't know how much money you make. I still don't know how secure your job is. I still don't know how you grew up, right? What your perception of money was as you were growing up. I still don't know what kind of environment you grew up in. Was it, super ghetto? Was it super uppity? I don't know any of that shit. Only you do. And really, this is going to sound super corny and super cliche, but I wouldn't say it unless I really truly believed it. A lot of the times we come into markets and think that it's all about trying to learn about the market. It's trying to digest and dissect the market, break it down, make it make sense. A lot of the times it's really just you're trying to master yourself. You're not trying to master the market. You're trying to learn more about yourself. Trading, right? Markets, but trading specifically is the best self mastery journey you can ever possibly go on. It's the best. There's nothing that even comes close. No other discipline, no other sport, nothing. Nothing is like markets. It is its own separate beast above all else. In order to do well in markets, you need to master yourself. Sounds fucking corny and cliche as hell. I really do believe that. I've found myself being not just a better person, but a better version of myself. So, in the sense that, like, my wife, I see this all the time. My wife gets super irritable, right? She gets so irritated at the smallest things, and it just throws her whole day off. And I have to come in and, hey, it's not that big of a deal, you know. In you ever heard of that 7 rule? In 7 seconds, this isn't going to matter. In 7 minutes, is it going to matter? In 7 days or 7 hours, is it going to matter? In 7 days, in 7 weeks, in 7 months, is it going to matter? A lot of the times, in 7 hours, it stops mattering. So don't let it ruin the rest of your day. So I have to come in and be that voice of reason for my wife a lot of the time. We'll be driving and, stuck in traffic for an extra 30 minutes as she starts cussing everybody out, and, you can see the rage on her face. Her face starts to turn tomato red, and I'm like, calm down. Like, it's okay, right? Be careful saying calm down in front of your wife. But I do. I have to bring myself to, be more rational about it. My friends and I will be playing video games, right? In a game of Rocket League, and they'll miss a ball, and we get scored on or whatever. And they start to cuss and get so irritated, and now there's, nitpicking all of my, mistakes and whatever. I'm like, dude, we're just here to have fun. This is a video game. I'm playing this so that I can detach from all the anxiety and stress from real life. I didn't come play this video game with you so that you could get angry at the video game. But guess what? 5 years ago, I was the person yelling at my friends for, missing out or missing a ball in Rocket League and getting mad at video games. But markets, right? And understanding myself and mastering myself and my own emotions and, forming that discipline really helped with that journey, and it translates to other aspects of life as well. You'll find that a lot of the philosophy, winning philosophy, that gets pertained to real life is also applicable to markets. It's also why you ask me, hey, Mercury, what are some of the best books that you've ever read about markets? A lot of them have nothing to fucking do with markets. Go read Thinking Fast and Slow by Daniel Kahn. That book has absolutely nothing to do with markets. It is one of the most enlightening books that I've ever read. It has everything to do with psychology and life and how your brain ticks. It has nothing to fucking do with trading. And it's one of the most applicable trading books that I've ever read. So much so, I hate reading. I hate it. I've always hated it. It's never been something that I've been passionate about or enjoyed. And I've read that book twice. Right? Nothing to fucking do with trading. So a lot of that same principles, a lot of those same philosophies get carried over. If you can master life, you can master markets. If you can master markets, you can master life. That's how that works. But you have to master yourself in order to master either of those. That's how that works. So I truly do believe that, man. I see a bunch of other questions. What number of coins should I trade, or should I start with, and what percentage? Any strict rules to having percentage of stables? Okay, so we can brush on some of these, but I'm not going to go too in depth because we will be here for another 2 hours if I answer every single one of these questions the same way that I just answered those previous two. But what number of coins I should start with, and what percentage of $100? So again, I can't help you with that. I don't know your financial situation. I don't know how secure your job is. I don't know what your risk appetite is. I don't know how secure your living situation is. I don't know how much money you're able to bank, right, in terms of savings versus what your expenses are. I don't know. I don't know any of that. So you have to find a risk tolerance that is comfortable with you. And that gets segregated across investing and trading. So how much do I want to invest of the money that I'm willing to lose, and how much do I want to trade with the money that I'm willing to lose? Just keep in mind that as a beginner, you're going to make a fuck ton of mistakes. So you're probably going to pay what we call tuition fees to the market, which just simply means you don't know what's right. You don't know right versus wrong. You don't know, if I win on this trade, was it a good trade, or was it just I got lucky and, I'm playing into losing philosophy and short-term variance is, swaying me. By the way, that's not my point here, right? I'm not saying you shouldn't buy sweeps of the lows, but it's all to you, right? You have to figure out, do I want to buy sweeps to the lows? Is that something that resonates with me? Is that my form of trading? You have to figure that out. But in order to figure that out, you have to put money on the line. You have to start trading. And more likely than not, because you're a beginner and you have, you're trading against people that are better than you and smarter than you and been doing this longer, and people that have way more money than you, and you're trading against algorithms that literally prey on the way that you trade, then yeah, you're probably going to lose money at first, right? So we call those tuition fees, and you have to pay that just like you pay tuition fees to college so that you can get a degree, so that you can get a better job and make more money. You have to pay those tuition fees to the market a lot of times, and then eventually you can start to learn, and then that turns into experience, instinct, alpha, edge, whatever, and then you can make money from markets later on, right? So just keep that in mind, but I can't tell you what that percentage is. Also, what number of coins you're trading is totally up to you. I don't know. Are you only comfortable trading 3 coins, managing 3 positions at a time? Are you comfortable managing 300 positions? I don't know, right? It's up to you. Any strict rule do you to have of percentage of stables? This is a good question. I do think that is in our best interest to have some amount of stable coins at all times. So even if I'm like full maximally risky, like full risk on, like I was back here, I still have some amount of stables, right? Even if it's just 10%. Even if it's just 10% of my portfolio, I can have in stables. And then if we have some crazy liquidation cascade, right? And I haven't taken any profit, let's say. I haven't taken any profit at all. I'm as max exposed as I'm allowing myself to be, 90%, and in my head that is 100% of what I'm allowed to have in terms of exposure, right? I still have that 10% of stable coins. What if I've not taken any profit, but the market is sold off -20, -30%? And that is an easy, right? What I'm dictating as an easy trade to catch a little mean reversion on this altcoin that is pulled back into a very high time frame trend portrayal, and it seems so obvious that it's at least going to mean revert and bounce 10, 20, 15, or 50%, right? That's an opportunity. So I need to make sure that I'm allowing myself to take advantage of that opportunity if it comes. And I can't do that if I don't have any stables at all. So I am an advocate for always have some amount of stables, even if it's just 10%. Just allow yourself that luxury in the event that something happens, right? It does pay off. I have seen it pay off. I have experienced that. Otherwise, I wouldn't advocate for it. I don't advocate for things that haven't brought me value long term. So, based on speculation, we are in the last part of the bull cycle. What should a beginner strategy? What should be a beginner strategy during this time? Be objective. You shouldn't be caring about, are we in the later half of the cycle? Are we early? Are we in the middle of the cycle? You shouldn't be caring about that, because if you're objective about whatever's happening currently, then you're going to find yourself on the right side of the wave at the end of the cycle when all things are said and done anyways. Call breakouts, call downtrends, etc., and you'll be just fine. Okay, a couple more questions. How should I go about making my watch list? Well, Friday streams are that. Success parameter I should keep track to understand the maturity of my trading level and start increasing my allocation. Journal. Journal fucking everything. Every single thing, journal it. Create a Discord channel with just yourself in it, no one else, and every single thought that you have. Not just every trade, every thought that crosses your mind pertaining to markets, write it down. Hit enter into that Discord channel. All of a sudden, a year goes by, you now have a stream of consciousness that you can go back to. How was I feeling this day? What was what affected me? What was Mercury saying? What was my crypto Twitter timeline saying? What trades was I in? What this, what that? And that will prove to be alpha. And I truly do believe. And when you're journaling, don't be fucking lazy. Write everything out as though you're trying to explain it to somebody that has no clue what the hell you're talking about. I don't know what a moving average is. Can you explain to me? Oh, okay, yeah. So the trend, this is how moving averages get calculated and blah, 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 and blah, blah, blah. And then, this, that, and the other. And then this is what I'm using to portray. And then, blah, right? Write it out. Explain it. You don't have to go that far, right? You don't have to, hey, here's what a moving average is. But explain it to someone like that. It's a foreign language to them. Break it down to that degree, right? And then what ends up happening is your best teacher ends up being yourself. You know what your own thoughts are. You know how your brain ticks. You know how you want to think about the market. You know what analysis you want to make. You know, therefore, what the next step is, what the backup plan for the backup plan is. You know all that within seconds of looking at a chart. That's valuable, right? So do that. Any other relevant points? Now, if we keep going on this, then we're gonna be here another couple hours. So I think we talked about enough, Lecter. Thank you so much for those questions. I hope that that provides some value to you. Okay. Hey, Merc, keen to know what app/platform you use to set price alerts. I don't use TradingView. I use an app called Tab Trader. TAB Trader. So I really like that app. You can pay for a premium version, but the free version is pretty solid as well, from what I can recall. I think you're allowed to set like 5 triggers at once, just from the free version of that app. So the premium version is cool, but I really think that you could probably just get away using the free version. Roy Lopez says, "Hey Merc, thanks so much for the great content. Can you give us your thoughts on Ethereum? I think we're reclaiming trend right now. Am I wrong?" Yeah, let's do Ethereum analysis. Sorry. So Ethereum is fun to talk about because this is the very high time inflection point that we were discussing. And it's our weekly trend portrayal, 200 daily moving averages, plus confluence in this massive range low. So that is the last line in the sand for bullish arguments on Ethereum before you hear me throw in the towel on any relevant time frame, right? Because the only other time frame that we can then discuss for why is Ethereum still potentially bullish is on this outlook, and that is discussing like a monthly trend, right? So that would be really the last line in the sand. This is the last line in the sand in an actionable manner. So something that we can discuss and execute off of, today or as of recent days, really. So we did discuss that at the time as it was testing that region. So this is not hindsight in that regard, but what would be hindsight is if we already did reclaim trends, and then now I'm coming to tell you, hey, we're reclaiming trends. So that's what your question is. The resistance level that I have in Ethereum is somewhere around here. And there's not really, so here's the discrepancy for someone like Sevik or someone who has the same question as Sevik. Why are we not adapting this resistance level? Because there's not really an amazing resistance level for me to adapt into, right? To say that, hey, Ethereum has to do this time in order to convince me. It's not really as sideways, right, as something like Bitcoin. So it's just a failure. It's not really enough for me to start drawing the resistance level differently and say, oh, hey, you need to reclaim this before I'm convinced that Ethereum is showing strength, right? So that's not the case. That's not how that's working in this regard, in this context, in my mind. This is discretionary trading. You don't have to agree with anything I just said, but that's how I'm looking at it, right? So with Ethereum, if Ethereum's reclaiming trend, what it is, it's probably a local trend. So if it's reclaiming a local trend that allows us the grace to say, hey, maybe we pull up to bearish retest a high time frame trend. And then depending on what happens at that high time frame trend, we can scale assumptions from there. Either the bullish snowball has compounded into, right? Or maybe we reject off of that high time frame trend and now we are crushing the snowball all over again. So depends on what's happening. But yes, in this regard, I would look at this as this is a local trend reclaim. And the local trend has been pretty clean. Right? It's been pretty straightforward. This is a reclaim. We allow for a bigger rally. We lose the trend. We would assume, never mind, throw in the towel. That's as good as we're going to get. We're probably going to downtrend from here. And then we do. We downtrend from there. So local trend has been pretty straightforward, pretty clean. So this does allow for scaling of assumptions. We started with, hey, this is the inflection point on a very, very, very high time frame outlook, right? The weekly trend portrayal and we can say like a 6-month-long range low. Man, hold that region, Ethereum. If that's not the bottom, I don't really know what's going to be the bottom, Ethereum. Maybe hold that region if you don't want to die. And then Ethereum starts to reclaim local trend, right? So now we can add some vindication. Now that spectacle is starting to become solidified to a greater degree. We're compounded. We're creating some form of strength. That allows us to think, hey, maybe Ethereum's going to continue breaking out and then bearish retest something like 4-hour 200s. Or maybe, you have a different trend. We could say 3-hour. It doesn't really matter. It's all the same gist anyways. It's all the same general idea, application, whatever. It doesn't need to be pinpoint, precise, accurate. So whatever high time frame trend portfolio you're using, we can tie that in and say, hey, you need to reclaim this, and then we can scale that to a greater degree, and we can go from there. And now all of a sudden, the region that we thought might be the bottom, range lows, right? Plus that very high time frame trend, it seems likely that we're going to be fulfilling what that says. Range lows go to mid range, go to range highs, right? But we would need that reclaim, and then that's that snowball to snowman kind of way of thinking playing out. This is not me saying you are not allowed to execute, you're not allowed to trade Ethereum at all whatsoever until we're above 4-hour 200s. I didn't say that. Please do not put random words in my mouth. Somebody replied to one of my tweets one time and said, Mercury, you're such a great trader, but you're only bullish whenever we're above 4-hour 200s. What? Excuse me? I've never taken a trade ever. I've never been bullish on anything ever. I've never given you the bullish argument. I've never said, hey, watch out for this very high time frame inflection point. Hey, we can take bets here on a weekly time frame, bet on a high or low, but just on the weekly chart. You just got to make sure you're zooming out. Oh, I've never said any of that. I've only ever said, oh, we're above the 4-hour 200s. Okay, guys, you're allowed to be bullish now. That's not the fucking strategy. Don't put words in my mouth. Please, I'm begging you. I hope that that's not the takeaway from this analysis. You were allowed to play into a spectacle. Hey, maybe range lows plus the same thing that has been a weekly trend portfolio for the past 3 years. Maybe that's a good region to take some bets on Ethereum, maybe buy a spot position. Oh, we're reclaiming local trend. Okay, that allows me to bet that maybe we're going to see a little bit of a bigger rally, right? A little bit of a bigger relief bounce. This isn't just a relief bounce anymore. This is a reclaim. This is a little bit of strength, right? It's a snowball. Oh, we're reclaiming 4-hour 200s. Now we've we've vindicated the idea that maybe range lows goes to mid range, goes to range highs. We now have a higher perceived probability of price action actually doing that. That's how that works, right? It's not, hey, yeah, we're at range lows and a very high time from inflection point, but you're not allowed to do anything about it until after 4-hour 200s are reclaimed. 4-hour 200s are reclaimed here. Wow, thanks so much, Mercury. I appreciate it. Oh, hey guys, in case you didn't know, Ethereum's bullish now. Come on, man. That's not the fucking analysis. That's not how we operate. That's not the way of thinking. That's not how we would execute. Maybe that is how you decide to execute, but that's not what I'm telling you to execute on, right? That is a valid execution because we'd be above high time frame trends and reclaiming key levels and deviating back inside of the range, just as we did this time around, right? But it's not the only thing that's available to us, right? This is not hindsight. We discussed the very high time inflection point well before it actually happened. We actually discussed it on this drop and it didn't happen, right? And then we broke down, we discussed it again. And this time it just so happened to actually get tested. So that's how we think about Ethereum, or that's how I'm thinking about Ethereum. And that's the kind of system strategy. It's not, hey, I see the strength, but you're not allowed to be bullish until 25% higher. No, come on, man. Let's be better than that. So there's really not too much else to say about Ethereum. If it does reclaim that high time frame trend, we threaten back to range highs, and then I would really look to scale the assumption that not only we get to that range high, we'd also break out above entirely. And then we can justify that with saying, well, we tested a weekly inflection point and it held. And the idea there on the weekly is that we will then create a higher high, right? That's the idea. So we'll create a higher high. Oh, we reclaimed the weekly inflection point? Oh, okay, maybe we're going to create a higher high. If we create a higher high, where does this stop? Whatever the next major resistance level is, maybe we would just target higher. We would turn our brain off, right? So that's what we're looking to play into if we're looking to play into this context. And that context implies we're going to go higher than that high. So you are allowed, you do have the grace to say something as silly, right? That sounds as silly as, I'm going to buy the hourly 200s reclaim, bet on a reclaim of 4-hour 200s, and then from there, target range highs and a breakout above this massive $4,000 resistance into price discovery. you are allowed to scale to that kind of a degree, right? Because that's the analysis. That's what the weekly trend was already telling you, whether we were trading at 34.14 as we are now, or whether we were trading at 290.75, 2975, right? It didn't matter. It's still telling you the same thing. The only thing is, the difference is we're trading 15% higher. But it's still the same analysis that we were making, right? That's the idea. So that's why we're allowed to scale the assumption, to scale to that degree, because we're pertaining back to what is the border of the puzzle piece, right? We always talk about how when you assess a chart, it's breaking it down like a puzzle. And when you're making a puzzle, you don't just randomly start grabbing a bunch of pieces all willy-nilly and saying, do these go together? Right, dude, this is 1,000 puzzle piece. You still have another 998 pieces to grab and pray and hope that that's the one that goes with that one. No, hey, this has a straight edge on this side, so it's the border, right? And you create the border, and then, hey, this is the waterfall, right? It's all the white and light blues. You put those together. Hey, this is the grass. This is the light greens. You put those together. Hey, this is the sky and the clouds. You put those together. And then all of a sudden, you build out each piece, each section of the puzzle. Now you understand the puzzle to the utmost degree, right? Now you can see the puzzle clearly. Markets are the same way. So when we're making an analysis on hourly 200s on Ethereum, it's going to get pertained with the context of what is the even higher time frame saying, and then what is the higher time frame than that one saying, and then that one, and then that one, and then we understand Ethereum, right? That's the idea. So you mentioned something at the beginning about being in two positions, hype and something else. Would you mind explaining your thought process on those? Can be quickly, or if I missed it somewhere, my apologies. No big deal. If you don't want to take what I'm going to say to you right here, right now, if you don't feel like listening to me talk about hindsight at this point, about positions that I'm already in that are already up to some degree, go watch the Friday altcoin watch list. Go scan that. I know it came out on Sunday, right? I think I put it out 2 days late, but go look at those and you'll see my justification for these positions in real time, or even before they triggered. So it's not hindsight, and that way maybe it clicks in your brain a little bit better. You don't have to take my word for it here today that I'm being transparent with you. You can see what was the thought process before this even happened. Hopefully that provides a little bit more vindication. But let's talk about it. So the first position I'm in is in hype. I am interested in this coin solely because if we reclaim hourly 200s, that is a reclaim of a high time frame trend per trail. So this triggered yesterday, and this broke out and pulled back into hourly 200s. And as we're breaking out, here's the contextual nuance different, because again, I know people are going to say, Mercury, what about this reclaim? You didn't call that one a reclaim. We've talked about in previous streams how it didn't look like a reclaim to you. Let's talk about the nuances. Very, very weird nuances, right? Because objectively, this is a reclaim of hourly 200s, so I'm allowed to put on a position that looks something along these lines. All right, I have my stop somewhere around here, and I'm able to target not just the next resistance level, not just the next resistance after that. Because think about it, and I know that this is weird, but hourly 200s are the high time frame trend for hype. They have helped us understand why hype would go 60% higher and why hype would go negative 36% lower over the course of weeks, right? So it's about as good as we're going to get in terms of a high time frame trend for hype. So I'm allowed to scale this to a pretty exaggerated, right? What seems to be exaggerated degree. So I can say, hey, not just here to here, and hey, mom, I made 2.6R, aren't you so proud of me? I get to target the next resistance level. I get to target price discovery. Because what if, hear me out, what if this ends up being high, low, higher high on something like a weekly time frame, right? Because the daily trend is this, right? And hourly 200s are helping us understand what is the daily trend, what is the daily market structure. So notice how the daily market structure shifts bullishly here, but it doesn't back here. But Mercury, that looks like a reclaim along hourly 200s. I don't know how much more to express this. I don't give two shits about these moving averages. It creates an illusion that moving averages themselves are the pinnacle of my system. They are not. Structure is. Market structure. Are we trading higher? Are we trading lower? Is it relatively equal highs? Is it relatively equal lows? That's the base foundation for my system. Everything else gets added to it, right? That's more detail. So the portrayals, the trend portrayals, the moving averages help me understand something of which I already knew. I already knew that the market was going lower. I already knew that the market was trading sideways. I already knew that the market was trading up. And now I have moving averages to help me digest that information. That's how that works. Moving averages are not the end all be all. Oh, I suck at trading. Let me go turn on 200 MA, 200 EMA. Look at that. I don't suck at trading anymore. That's not how that works. That's not going to save you. No indicator, no interpretation of structure, nothing is going to save you. It's your discretion, your execution. That's what saves you. That's also what breaks you, right? So that's what needs to be the priority, not the fucking moving averages. So many people get caught up on that idea. And hear me out. Even if your discretion is that maybe this is the reclaim and I should hide stop below previous structure, technically this one, we can get away with that one. Even if that's your analysis, okay, you lose 1R. Look at that. You're already up 1R just from taking the same exact trade the next time around. Right? So it doesn't really matter all that much. But this, in my humble opinion, was not enough to convince me that that needs to be the breakout reclaim that I'm trading. It just wasn't. If we would have given the, right, if that would have happened and then I wake up and, oh, here's price. Well, in hindsight, that's the breakout reclaim. We're breaking that structure. And yeah, this is headed to the top right corner. That never happened. So the reclaim, hourly 200s, breaking out of this local range and shifting the structure bullishly on the daily. All that happens right here. So I take a pullback retest position at trend support and I'm targeting higher. And I'm allowing myself to think big, think logarithmically. This was a previous outperformer. Who knows, maybe it outperforms again. Even if it just gives me a measly 15% push and a $25 and I take a little bit of profit, that's a 2.5R trade. I've already locked in, 0.3R as a result. So pretty good. I'm playing with profits at that point. And then by the time that the hourly 200 trend breaks down and I'm up 0.3R and we break down here, all in all, I'll close it for 1R. And that's worst case scenario at this point. All just because I bought the breakout reclaim of a local range and pullback of a local trend and break in daily market structure. So that was the idea on Friday, and that was the idea that I executed on Tuesday. So that's that trade. And then the other trade that you're referencing is my Lido position. So I didn't actually trade Lido the last time around, but I did trade it this time. Oh, sorry, it's actually 12-hour 200s. And this is the same position that we just discussed on Friday, and it's also the same position that we discussed on this test, right? I didn't take it that time. I took render instead. So the position is, well, technically stop should be below that structure. I'm imagining that as long as we hide it below this wick, at that point, it's good enough, right? At that point, if we're breaking down below this range and below the 12-hour 200s, and they look like this, right? And price is all the way down here, I'm imagining that whether my stop is here or here or here, it's probably going to get hit anyways. So I scale my assumptions. And what that does is, in terms of perceived probabilities, how likely am I to be correct on the trade? I have to imagine that I'm a little bit less likely to be correct because I'm kind of trying to pull a fast one on the system, right? I'm saying, hey, system, you're telling me that if we break this structure, then I'm invalidated. But look, that's a 4.3R trade for catching a 120% move. Ooh, that's not that great. Oh, yay, I'm up 100%, Mom. I made 4R, right? Because I took some profit at mid-range, Mom. So really, I'm up 3R as a result. But I caught a 100% move. Aren't you so proud of me? Yeah, no, your mom isn't that proud because she doesn't get to retire. So we wouldn't do that. So instead, my kind of like offset is I'm going to give a little bit of perceived probabilities. I'm going to say, I'm going to try and be cute here and say, hey, market, this stop loss fucking sucks. I don't want to hide negative 20% lower and after I'm down negative 30% on my position. Oh, well, clearly it's downtrending now. Thanks, Sherlock. I already knew it was downtrending. Negative 10% ago, right? So I pull a fast one on the market. I'm exchanging a little bit of perceived probabilities. I'm still mostly playing into the system. It's not totally arbitrary, even though it somewhat is. I would love it to be like, hey, the structure is more like that, right? We don't have that, but this is about as good as it gets anywhere between here and where my entry is. So this is all I really have to use. So that's where I'm going to put my stop loss, right? And if we start to break down and lose 12-hour 200s and we break down below this 2-year-long range low, and at that point we're trading negative 15% below my entry and we're breaking that little tiny bit of structure, I'm imagining that this is going to get stopped out anyways. So that's the position that I go to put on Lido. Same exact thesis as the last time around, allowed for a 55% relief bounce into mid-range, didn't even do what we thought it would do, range lows, mid-range, range highs, 55%, and that in itself is already a 3R trade. Pretty damn good. So the same principles, the same philosophy, the same setup, everything is exactly the same. It's exactly the same trend. It's a little bit different in terms of nuance because the structure is kind of odd, it's kind of ugly, but we still understand the same gist. It's range lows of a 2-year range, and it's the very high time frame trend that, in my humble opinion, has been incredibly clean for all of Lido's existence, right? Even though prior to this, there's on-chain history that we can't see, but you get my point, right? So that's the major inflection point on that time frame, and I just simply position, and we're up. It relief bounced into mid-range, and now I'm looking for it to continue bouncing in towards range highs. It's not even an outperformer. I need you to know, I need you to understand, I am contradicting every principle, every philosophy that I've ever spewed at you on Friday streams by not trading XRP and instead trading Lido. Every single time I've gone, oh, that stronger coin, that's stronger, yeah, it's probably going to continue being stronger. Every single time I've said that, I'm being a hypocrite. I'm being a fucking hypocrite by neglecting, not putting XRP on the watch list and instead adding something like Lido. Guys, you tell me, for the past 2 years, has Lido been an outperformer? Fuck no. No, it's not an outperformer. A valid trade is a valid trade. Have you ever heard me say that? If you've been with me longer than 2 months, you've heard me say it a million times, right? A valid setup's a valid setup. Don't shy away from a valid setup just because it's not an outperformer. You want to prioritize outperformers, of course we want to do that, right? If I can bring myself to trade XRP, then absolutely I should be fucking trading XRP. I just can't bring myself to do it for my own personal biases. But that doesn't mean that XRP isn't an outperformer. For however many weeks on end, we have said XRP is clearly an outperformer. Maverick even asked me for an XRP analysis last live stream. We said, hey, this is the analysis. This is the hypothetical setup that you could look to trade on XRP. Well, look at that. XRP is outperforming. No shocker there, really. So I'm being a hypocrite. I need you to understand I'm being a hypocrite. It doesn't matter. Opportunity is fucking abundant. I'm able to take advantage of positions in different assets and different coins and different trends and different structures and different whatever. I was praying PREY on the Cardano hourly 200s reclaim. I was waiting for it. Tranquility and I have been going back and forth. Mercury, why would you buy the hourly 200s reclaim on Cardano? That doesn't make any sense. Isn't it technically plan C? And I've been saying, no, I want to trade it. I want to trade Cardano. I made money on the last rally, the last time I tried to buy hourly 200s. It popped 35%. By the time it broke down, I was still up a couple R. I want to trade Cardano again. It looks like an amazing trade to me. I missed out. I didn't catch it. I didn't buy the pullback. The setup that I drew out in Friday's stream, I went to go trade it, but I didn't. I didn't get to trade it. I'm sidelined on Cardano. It is what it is. It happens. So I hope that there's greater takeaways than whatever I'm spewing at you in face value. I hope that eventually we're able to to see the bigger picture without me having to ramble about it. That's never really going to happen because there's always going to be new members in this Discord. I'm going to have to reiterate things. No, not trying to put you down or anything, Linko, but I'm always going to, reiterate things. But I hope that you get to a point where you're like, Mercury, I've heard this before. I get it. What's the big deal? Because at some point, maybe you were the person that it was an aha moment for you. Don't take anything I say 100% degree too literally. Don't do that, because there's nothing that I can say in pertaining to markets that is going to fit to 100% degree. That's just not the reality of markets. They're too nuanced. They're too weird, right? They're too obscure. They're too unique for me to just be able to make one statement and it just applies 100% of the time. It's not the reality of it. So, WT, I see your mic muted. Do you have something to say to me, or is it just hot mic? I think it's just hot mic. All right, I'm gonna server mute you. No personal beef or anything. If you want to be unmuted, just let me know. Appreciate the explanation. Processing the stream, watching and annotating the chart, plus then executing it is a lot harder than it seems. Yes, it is. So, processing the stream, probably not that difficult. I think the more streams that you watch, the more things will start to click. Annotating the chart, making an analysis about the chart. What is this doing on this time frame? What is it doing on that time frame? Again, pretty easy. Comprehensive ability of a 4-year-old allows you to say, hey, Cardano's doing this on this time frame, this on that time frame, this on that time frame. Executing, that's where you're tripped up. Executing on your thoughts, that's the hard part. That's the real beast that you have to overcome. That's why I say analysis is bullshit. It's not going to save you. It's just not. I don't care what indicators are on the chart. I don't care what moving averages you're trading. I don't care how well the moving averages get respected. I don't care how pretty your range draw is. I don't care. It means absolute shit. The greatest traders that I know, if I were to list out top 5 traders I know, top 3 or 4 of them don't even use any analysis at all. Don't even look at the chart. Don't know what moving averages are. Don't know how they're calculated. Never heard of RSI. Don't know what a divergence is. No, nothing. But they're some of the fucking greatest traders I know. And yet, there's one individual in particular, but I'm sure this applies to a large variety of people. There's one individual in particular that I know from way, way back who I used to look up to and admire because I could basically ask them a question and they were a walking encyclopedia and thesaurus of anything market related. Anything. Hey, what is funding? Hey, how does this indicator get calculated? Hey, what is Gauss theory? What is Elliott wave? What are harmonics? How would you draw out harmonics? Hey, what's the historical tendencies for yearly opens? Hey, this, hey, that. Oh my God, this person fucking knows everything that there is to know about anything analytical. And then my mentor goes, oh yeah, they've never been able to figure out anything to do with trading. They don't know what to do. They have 15 years of trading experience of being a chartist, right? They can draw pretty colors and lines and harmonics and Gauss theory and Elliott wave and tell you where the yearly open is. They know all that shit, but they've never actually been able to trade consistently well. 15 years, never figured it out. It doesn't matter. Your analysis is bullshit. It's vanity. It's there to help you understand brain to gut signal. Why am I pressing the button the way that I am? Why am I pressing the green button the way that I am? Why am I pressing the green button to this degree position size? Why am I cutting, right, the position that I'm currently in? Why this, why that? Brain to gut. If your brain can understand why you're doing something, when you send that signal down to your gut, it's going to feel more seamless. They're moving in tandem with each other, right? It's a very clear connection between the two. That's all that it is. It's your brain trying to justify to your gut, why are we buying this? Why are we selling this? Why are we doing nothing, right? That's it. That's all that technical analysis is. So when you really break it down, your gut is going to be the thing that saves you. Your instinct, that execution, that feeling, right? That tendency. Your brain is the kind of driver that tells you when to execute on that tendency, or when to execute on those feelings, or on that instinct, right? So, really, it comes down to gut. It's always going to come down to that gut, which means execution. Execution is 95% of trading. The other 5% is analysis, right? And the way that I make fun of this idea is, you don't know what's happening here? That's pathetic, because a 4-year-old does. You don't know what's happening here? That's pathetic. A 4-year-old does. You don't need moving averages. You don't need, hey, is this a high or low? Is this a higher high? Oh no, but Mercury, that's a lower high, and there's market structure, but Mercury. You don't need that. You don't even need that. Ask a 4-year-old, ask little Timmy, which way is that headed? They know. They know the answer. How do you justify executing on what you already knew? Oh, we turn on hourly 200s. Ah, okay, yeah. Right? Prior to this, actually, prior to hourly 200s, it was 30-minute 200s that we were using for Cardano. Ah, okay. So I can trade 30-minute 200s. Ah, I got it. Execution. Execution is the real beast. Analysis is easy. Anyone can be a chartist. Not everyone knows how to extract value from markets long-term consistently. Big difference. Prioritize the execution. Figure out what not to do, and you will get very far. And speed up the learning curve process as well. I can't tell you how much of my trading phase of my journey was getting caught up in the vanity aspect. Changing the colors on boxes, drawing gray lines, everywhere, using 15, different indicators, so much so to the point where the chart was so scrunched up I couldn't even fucking see it. What is happening on this chart? You don't even know, because there's, all these indicator, right? Oh my God. So much easier. The height of cultivation is merely simplicity. And there's a quote by Bruce Lee. Did anyone else have a weird obsession with Bruce Lee when they were growing up? Because I did. Dude's a badass. I remember watching the video of him playing ping pong against a Chinese professional ping pong player. Person that went to Olympics is like #1 in all of China. And he was playing ping pong against that person using nunchucks. And I just remember thinking, this is the most badass motherfucker on the entire planet. I want to be just like him. Nothing like him, but but yeah, he's still badass. Oh, that's an interesting thought. Rishi says, when I feel too stressed out by the analysis, I switch to line chart and it instantly calms me down. Either price is moving up or it's moving down. You simplify it in your brain, and that provides some amount of comfort and some peace to you. That's a good little addendum. Aqua G, hey again, Merc. When you say maybe buy a spot position in ETH, keen to know how you position your spot positions versus trading positions. And is your stop loss wider? Keen to know how you differentiate spot versus trading. Okay, so really, when I say spot, you can pretty much determine that anytime I'm trading a high time frame position, I am trading spot positions. So the way that it gets implemented is exactly the same way as any other trading position ever. Think about the dynamics or the principles of when we buy a 30-minute 200 MAs reclaim, right? Because that was the trend to trade on the way up on Cardano. We buy a 30-minute 200 MAs reclaim here, and we go to hide stop below previous structure. We would say technically this one, I'm going to say that one, and it's good enough. And we would target continuation. So we have structure, right? Structure's shifting bullishly. We have a higher low that's being locked in. We have a support level is being reclaimed maybe, because at the time, this price action didn't exist, so we wouldn't draw that support that way. We'd probably draw it this way, right? So we have what was previously support, and then resistance, and then support again being flipped. We have 30-minute 200 MAs trend. We have structure. Think about those principles. Now let's go talk about Ethereum. We have 200 daily moving averages, right? We have weekly structure. So the idea is this is the ideal place to lock in a higher low on the weekly chart. And if we don't lock in a higher low here, then we're not going to lock in a higher low anywhere higher than here. So technically this is the structure. So any stop loss that we put is going to be more arbitrary because this is technically our structure. That's a negative 20% stop loss. Nobody wants a negative 20% stop loss. It's going to kill your RR on the trade, right? Even if we're targeting, let's say $5,500 Ethereum, you manage to capture 4R. So that's not reality. So we'd probably hide a little bit more arbitrary stop loss. So somewhere in between here and entry price, wherever we could. I would love for there to be some kind of microstructure here on like a 4-hour chart, even if it's just that little tidbit, and we can say, okay, let's just hide it below that instead. But in this case, the only way that you're going to get around it is just by having an arbitrary stop loss, just in thin air, right? Arbitrary meaning there's no reasoning behind it. There's not even the slightest reasoning. You're just putting it there because, I don't know, you're just putting it there, right? So it's going to be arbitrary. It's going to be, why is my stop loss here as opposed to here as opposed to here? What's the difference? There isn't one. There's not really much of a difference. There's no reason to put a stop loss anywhere that isn't here. So my scaling assumptions, remember, we said the same thing for Cardano along 30-minute 200s, right? We said, hey, technically the stop loss is supposed to be here, but you're trading a 30-minute time frame and you're trading a local trend. And so it doesn't need to be here. We're kind of assuming that this is going to be the higher low on Cardano on that local trend per trail. And we can use this structure or maybe even that structure, but anything is better than that one, right? That scaling of assumptions. And I use that term pretty generally, so it might be hard to keep up with what I'm, relating to or what I'm discussing or I guess referencing. But in this case, it's scaling assumptions for stop losses, right? So instead of using a stop here, I'm heading a stop here. And it is more arbitrary, but at least we have some degree of something, right? There's some substance. There's at least a little bit tiny of a microstructure we can justify hiding below that. All the other principles are exactly the same, right? So now we're saying the exact same thing on Ethereum. We're buying a weekly trend per trail. We're buying a range low support. And we're betting on a higher low on the weekly time frame, on that weekly structure. And we're going to hide our stop loss. We're going to scale the assumption. Technically, our stop should be here. I'm going to try and be cute and pull a fast one on the market and say that I'm going to hide it here instead. If you start to break down below 200 dailies, the weekly trend, and you start to expand too far away from this range low, then at that point, whether my stop is here or there or there or there, right? Even if it's at that structure, I'm imagining to a much higher degree of confidence that you're going to stop me out anyways, regardless of whatever the stop loss is, right? Regardless of wherever it's headed, because we would scale assumptions, right? We would say, hey, now that we've broken down, we're deviating back inside of this range. So we're probably going to go for the range lows. Oh, well, there's your stop loss, right? So we're implementing the same exact principles, the same exact concepts that we just implemented on Cardano on the 30-minute time frame. We're saying the same thing here and now for Ethereum, but just on the daily time frame. And really, we're trading 200 daily moving averages and let's just mark this out really quick, 160 plus another 70, right? So what's the math on that? 230-ish days range on Ethereum. What are we actually playing? We're playing this time frame. We're playing a weekly time frame. We're playing a very, very, very high time frame, right? You know what the hell you're playing. You know what structure you're playing into. You know what outlook you're positioning for on Ethereum when you go to position for it. This is not the same as buying the 30-minute 200 MAs reclaim on Cardano. When I go to trade that Cardano position, maybe I'm just buying a local trend on 30-minute 200s. My stop, my invalidation is a whopping 4% lower. Why do I need to be buying spot Cardano here? My trade is probably going to conclude within the next week or two, right? On Ethereum, you might be holding this position logically, reasonably for months. Do you want to pay funding on Ethereum for the next 3 months? Oh, but your trade isn't invalidated, right? Oh, we start to chop sideways, right? We linger around your entry for a few weeks. The funding has already caused you just alone to be down -1R. We haven't even stopped you out yet. We're just going sideways. You want to pay funding for the next 3 weeks and be down 1R, and the trade is still sitting at your entry? You're going to cut here because the funding is so damn extreme that as we're pending the breakout into new all-time highs in price discovery, you don't know if you can even justify continuing to hold the trade. You're probably just going to buy spot and forget about Ethereum, right? You're going to set that stop loss the same way that you set it on Cardano, but you're going to do so on a spot position. When I'm trading spot positions, for the most part, to 95% degree, it is exactly the same as when I'm trading a 30-minute 200 MA's local trend reclaim trade on Cardano. There's not really much difference other than the fact that on Cardano, I don't need to use up my capital, my spot, right? Cash. I don't need to use that. I can just use a fraction of it and use leverage, and then I can still have that Cardano position, and that way I still am able to capture other opportunities elsewhere in the market, right? But for Ethereum, I'm just going to buy spot and wait it out. That's what's in my best interest to do. You don't want to be paying funding for a month, 2 months, 3 months. It's going to eat into your profits. And it's not going to seem like a lot because that Ethereum position plays out, you're up 8R. But by the time that it plays out and you're up 8R, you will have paid 1.52R just in funding alone. Because guess what? People want to be long in a bull market. Crazy thought, right? Hey guys, why are you here for bull markets? Because prices go higher. Oh, okay, yeah. So then when prices go higher, people start to pay a premium for funding. So hey, give me leverage. I want a long. I want to be bullish in a bull market. Doesn't that make sense? Yeah, it does. Guys, the funding is super high. Oh my God, the funding, this needs a reset. We need to wipe out the funding. We need to wipe them out, wipe them out. Dude, come on. It makes sense. People want to be bullish, want to be long positioned in bull markets. Fucking duh. Why are you here otherwise? Why are you watching my stream right now? Right? You don't want to be paying funding for that. So just position on spot. It's the same concept, same philosophy, same principles, same fucking system. Everything's exactly the same. All that has changed is that instead of talking about a local trend and a local trend reclaim, you are talking about a weekly trend and a 7-month long range, right? Range low, right? That's what you're talking about. So trade that, but just trade it on spot. Anyone help me how funding rates are calculated? That is not my forte. That is not, definitely not what I'm overly knowledgeable about. DevSoul might know the answer to that question, but ChatGPT definitely knows the answer to that question, and so does Google. But funding is just the premium that people pay to borrow leverage. That's it. That's all it is. There's a baseline for funding. It's going to be, usually it's 0.1%. So it's incredibly low. That tends to be neutral funding. Neutral funding meaning you are borrowing leverage. So you're going to have to pay some kind of interest payment for borrowing my money, right? And that's it. But as more and more people borrow money, it's an incentivization for someone else to come and take the opposite side of the trade. Because if everyone wants to be long in a bull market, then what that means is there's no liquidity for sells, right? So exchanges want to incentivize people to take the opposite side of the trade, and one of the ways that they do that is an incentive to for funding. So you can short and you will reap some amount of interest, right? Because everyone else wants to be long. You're providing that liquidity on the other side of the book. So it's an incentive. It's not really the greatest incentive in the world. It tends to be mostly kind of just negligible. 98% of the time, funding is negligible. But you carry it out and drag it out to a long enough time frame, and you look back and all of a sudden you will have paid 2R just in funding alone on your 20R trade. And that doesn't sound like much, but when you capture 5 20R trades, and then you're up 100R. Well, you look back, you could have been up 110. So, and then really, when the bull market, subsides, and all of a sudden we're now chopping sideways, and you take a couple, fake breakout trades or whatever, you get chopped up, you give some back to the market, you're only up 80R as opposed to 100. That 10R would have helped a lot. And now you're going to be wishing that you captured that additional 10R. So funding is negligible, but just trade it logically, right? If you're trading a very, 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 very high time frame, maybe consider allocating a spot position instead of borrowing leverage to allocate that to that position. You plan on being in that trade for a substantial amount of time. It's not just a measly, hey, we reclaimed a local trend. Maybe in 2 weeks we're going to trade 40% higher, right? It's different. It's very different. All right. Anything else that you guys want from me? We have been going for about 2 hours now. I think this is a good place to wrap it up. But if you guys want anything else really quick, any questions, comments, chart requests, maybe very quickly. So buying reclaims with leverage after large flush outs like we just saw now is good. Leverage is logical only in bull markets, so funding will... no, that is not the takeaway. Leverage does not matter. That's what you need to understand so that you can ask me the right question, Rishi. Leverage does not matter. And I have a video on this, and it goes into why leverage doesn't matter. So leverage is simply a tool that you get to utilize because, think about this. If I'm creating an exchange and I'm this shady character and you don't know who I am, I'm just some random dude, and I'm like, hey, come trade on my exchange, Rishi. Are you just going to come deposit? Okay, yeah. I'll put $10,000, my own hard-earned money, onto your exchange. Some, hey, shady random character that I don't know who you are. No, you're not going to do that. So I have to incentivize you with leverage. Hey, you don't have to put all $10,000 of your money, Rishi. You can just put $1,000, and you can use 10x leverage, and it's basically like you're trading with your full 10,000 anyways. Now you're more inclined to want to deposit, right? At least something. So now you can deposit and you can trade with 10x leverage, and you can, therefore, your $1,000 is going to provide liquidity on my exchange, and that's going to make it a much more seamless and better experience overall for the other person. So the next person is like, no, why would I trade on that exchange? It's super fucking illiquid. It sucks. It's a terrible exchange. But as more and more people, hey, I'll deposit 500 of my 5,000. Hey, I'll deposit 1,000 of my 10,000. Now all of a sudden the books are liquid. So now, people are willing to deposit even more money, and the books are even more liquid. And oh, look at that. Now I've created the best exchange in the entire world. And, my name's Binance, my name's Bybit, my name's Coinbase, whatever, right? So that's how that gets started. That's the incentive to use leverage. I have a video on this that covers everything. Leverage does not go further than that. Did you just hear what I said? Leverage does not go further than that. That's it. That's where leverage stops. That's all you get to use it for. If you are using leverage in any other way, you are degenerate. I hate to break it to you. Know what you are. You're degenerate. Take pride in it. I don't know why you would take pride in that, but people do. Oh, I'm a fucking degenerate. Haha, I'm in the trenches. Oh, okay. That's a weird way to say that I have a gambling addiction and consistently draw down my entire portfolio to zero. Wow. That's a weird way to say that, but I mean, all power to you. Yeah. Any other way that you're using leverage, any other way that you're thinking about leverage is incorrect. Oh, hey, but by the way, in exchange for me giving you $9,000 on 10x leverage, right? So that you can have 10 grand and not have to deposit your full 10 grand, you just deposit 1,000. I'm going to ask you for a little bit of interest, right? It's going to be paid out every 8 hours. And you're going to pay a very, very small percentage of whatever the position size is. So you're using 10,000, so that's how that interest is going to get calculated. But I need something in exchange for giving you my money so that you can trade on my exchange. That's how that works. That's it. That's all that leverage does. That's where it stops. Yeah. Leverage is also something that people can use to hedge positions, to capture funding, and that would be called arbitrage. So let's say that hype gets listed and I have a shit ton of spot hype and I want to sell my spot hype, but Binance just listed hype and the funding on hype is very fucking high, right? It's like 1%, which averages out, let's say, 300% a year APY on hype funding just for being short on hype. But I think hype is going to go higher, but I'm ready to take profit on hype. But I'm getting 300% APY, right, to just short hype on Binance. So instead of selling my spot position on hype on chain, what I'll do is I'll deposit some money, a good enough amount of collateral onto Binance, and I'll short hype the same exact amount position size. So if I have $1,000 spot allocation to hype, I will be short $1,000 of hype on Binance, and I'll be capturing the APY on Binance. And any increase, right? So my short position starts to go negative, it's being wiped away with my spot long position. I'm still, right? That is net zero. I'm short $1,000 on hype. I'm long $1,000 on hype. I'm gaining nothing. Whether it goes higher or lower, I lose nothing, I gain nothing other than fees, right? But the funding is now all of a sudden paying me 300% APY. So after a month, I lock in, whatever, fucking 15% APY just for shorting hype. And isn't that so much cooler than just selling my hype position inside? That's a whole other beast. Now you're getting to arbitrage. Now you're talking about being a quant. Now you're talking about, wow, man, you lost me, right? You lost me as Trader Mercury. Maybe that's your thing, but if that is your thing, you didn't need me to tell you that. I'll tell you that straight up. If that's your thing, if that's the kind of thing that you gravitate towards, those kinds of, quant kind of data and all those mechanics and arbitraging the market and finding, those bits and pieces where there's, crazy value and essentially what is, what we deem very low risk or zero risk kind of returns. If that's your thing, then nothing I just said is new information to you. Right? If it's not your thing and you're inclined, now I intrigued you with what I just said, you need a lot of more knowledge. It doesn't just stop there. There's a lot that you need to pick up on in order to actually go and do those things. So everything sounds easy in practice, especially in markets. Much harder to execute, right? As who was it? As Linko, right? Yeah, as Linko mentioned. So nobody has any questions, comments other than that. So I will go ahead and wrap this up here. Thank you guys so much for tuning into the stream. I hope that you're enjoying being part of the Discord overall, and I hope that you're getting value from the streams. I hope that you're doing well, and I hope that you are able to be optimistic about the future. So thank you guys so much for tuning in. Thank you for being a part of the family. Much love. Take it easy. I will talk to you again on Friday. Peace.